Hello everyone, K Kim here. Today is January 26, 2018, Friday. It's around 11:30 Central Time, 11:30 a.m. Central Time. So market should be open another, 3 hours or so as I record this video. Hope you guys had a good week trading thus far. Market continues to grind higher this week. Again, my name is K Kim with the Traders Club. Welcome to the actually special report today slash market update. But I got a couple charts here that I pulled out. Yesterday, I wrote an article called Cocky Bulls Buckle Up. And I'm just going to kind of reiterate and expand my thoughts on that. So we got a couple slides here, and then as of late, I've been getting a lot of comments or questions regarding, it's tough to sit around in cash, and market continues to move higher. Hardest thing in the market is always just kind of waiting around. That's always the hardest thing in the market, is just kind of sitting around in cash. I normally won't sit around in cash unless I think the market is showing some kind of a market crash signal, like the whole thing is gonna crash, or I see that the market is gonna see more than 25% corrections, which I don't see at this point. My previous article, I talked about how I see the market is coming down maybe 5 to 7% on the S&P, maybe a little bit more on the Dow, but I don't see anything more than that. And market is bullish, and since mid-2016, if you've been following my videos, my articles, my posts, my Twitter, my blog, then you know that I've been emphatically advocating that the market is not going to crash, and we're going to see 5-year bull run. New secular bull market is ahead. The extinction of the bears. All these videos that I've done, a long-term analysis video back in mid-2016, which I forecast that the market isn't going to crash. So, and not only market isn't going to crash back in 2016, mid-2016, which was prior to the election, I also forecast that we're going to see a very, very strong bullish move. So ever since mid-2016, if I pause during the video, I'm just drinking my smoothie here that I made this morning after I went for a run. It's actually very beautiful today. Here in Minneapolis, 40, 50 degrees. I'm sure wherever you're at, if you're in the West Coast, you're already enjoying summer weather. Anyway, so where was I? Since mid-2016, I have been positioning myself. So basically, I'm going to go more into it, but before I get into what I want to talk about is basically what you can do is I have two portfolio, right? One is for short to mid-term positions, which this is where I play calls, right? Call options, which I've been journaling and I've been talking about if you've been following me on my blog and Twitter. And when I say short term, I don't mean like day trading or swing trading. You guys know that I'm a position trader. When I say short to mid term, I mean holding positions 3 to 6 months, 6 months, a year. So that's the one portfolio. Another portfolio is I have positions for long-term investment stocks that I'll be holding for years. So since mid-2016, what I was doing is I've been accumulating calls and shares. This is Dow Jones Industrial Average. So since mid-2016, let's see. Let's go to S&P here. This is S&P 500 index. So this is the election. This is a Brexit. And so somewhere here, I've been in that vicinity, I've been buying these dips. Not only calls on Spider and other different individual equities, but I've been buying shares of individual equities as well. And many of those which I talked about in the past videos and written article, things like that. And many of those shares that I purchased at that point, I'm still holding full shares. But the calls I've purchased, mid 2016, early 2017, all throughout this summer of 2017 on these dips, I've been almost all out of. I got some calls still working, but almost all out of, almost like I think 90% equity, right? Individual equity call positions, I am out. So I'm holding 90% cash on my short to mid term. Again, my short term isn't day trading, isn't swing trading, right? My short to mid term portfolio, all my call options are pretty much gone, right? But in my long term investment stock, they're full. So the shares that I've been accumulating since 2016 and 2017, I have not closed them out because I forecast that the market is going to continue higher. And I'm forecasting about, could be 10 to 15% S&P by end of this year. The best case scenario, maybe 17, 18. Possibly close to 20, but I'm thinking around 15%. The worst case there maybe around 10, and it's not gonna be easy year. It was a very smooth year in 2017, as you can see, but I don't believe it's gonna be easy year in 2018. Why? Because most people missed out on this move and they wanna catch it. So when we do see a 5%, possibly 7% corrections, they will be buying. There will be dip buyers coming in buying this dip for a long-term kind of a trading investment idea, and which is a good thing to do, which I'll be doing, which I'm going to be talking all about that. But a lot of people are thinking that, it's going to look like this, 2016, 2017 run. They're going to be like, you know what, I should have bought this dip prior to the election, but I got too scared, I was too fearful, I was calling for the crash, a lot of these people are saying, and so I didn't go, and then they were watching, they finally can't handle it anymore, they can't watch this thing keep going up without seeing a crash, right? So they finally convert, they finally flip to bullish, last maybe a month or two, and that's when we had that panic bullish run, right? And then when we actually finally see that corrections, a lot of people are going to start jumping in again, thinking that it's going to look a lot like this. It's not going to be. And I'm going to show you that in this chart. So this is why when I foresee that, when I'm bullish long term, in 2015, in 2016, I pretty much had no long-term shares. I was only playing calls more strategically and more tactically. And then when it got into about mid 2016, when I came to a conclusion, I had reasons to believe, very strong reasons to believe that the market isn't going to crash. Not only it's not going to crash, it's going to thrive. I started accumulating long-term stocks. You see, so there are different time, there are different seasons, different circumstances for different strategies, right? 2015, 2016, kind of a dire situation. What is going to happen? Is market is going to crash? What the market is going to do? A lot of speculations, a lot of allegations, a lot of fear, uncertainty, right? Then that's when you want to be a little bit more defensive and a little bit more not as aggressive. Maybe, play a little bit more of a midterm, short-term plays here and there. And then once I came to a conclusion that market isn't going to crash, but we're going to see a big thrive in the equity market, then you start accumulating shares. And so those shares I'm still holding today, most of it. So as the market continues to move higher, a lot of those shares have been making its move to the upside. For example, like Intel, Cisco, I have, shares on these positions, Ralph Lauren and NUEA. I'm going to go through all of it later. MGM is my first position I started accumulating back in like July. All of these stocks start breaking out. So calls are gone. but my shares still there. But at the same time, I have some hedges on and protections on. So when we actually do see 5 to 7% corrections on the S&P, what's going to happen is some of those shares, many of those shares are starting to decline. Instead of closing everything out, because these are long-term shares, guys, for calls, yes, I'm going to close everything out as it starts to rip like this and lock in gain. But with shares, I am bullish for long-term. And I am bullish all throughout this year. When we do see a pullback, what I'm going to be doing is I'm going to start buying the dips on those shares. I'm going to be adding the shares on that dip. And then probably buying some calls, reloading some calls as well. So when the market is bullish like this, that's kind of how you want to take it. One part, you want to have some kind of an aggressive strategy, some call options, and then one part long-term, more static strategy, right? More stationary strategy. You're not going to be always in and out. Those are going to be a low maintenance stocks. And then we got high maintenance positions where you're going to be playing calls, long-term calls. I get asked a lot all the time. They say, well, what kind of, how far do you go? Every time I buy calls, I always buy the leaps, the calls that expire either 1 year or more. Sometimes I even go out 2 years, right? They are more expensive, but I can't able to ride it. This is a reason why I started buying calls on Spider and these dips. And in the summertime, I've been adding on every single dips right here, and you saw it on my IWM journal post. Not only I was adding on IWM, I was also adding on Spider. And then when this thing just melt up, I started to close all of my call options. I was able to hold through that, some up and downs here, you see. So that's how I play it. I play calls with leaps. I hold through 3 to 6 months, 6 months to 12 months. Right, and then I buy shares, and shares I hold. Usually shares I hold about 2 to 3 years before unloading some, and some I'll hold 3 to 5 years. Right, so that way, if market continues to move higher, then you can keep milking it. That way, I have plan and strategy for both directions. But with the proper risk management, you're not scared. You're not going to be scared of a pullback, right? If 5 to 10% happen, I see it as opportunity. I'm not scared of it because there's a proper risk management in place. You see what I'm saying? So I am bullish in the market for very, very long term. I am bullish for the long term, maybe for the next 5 more years. But again, we'll look at the market on a daily, weekly basis. But I am very bullish in the equity market. I don't believe the crash is coming at any time soon this year either. But this year is gonna be a little bit more hectic. It's not gonna be as smooth. So let me explain. First, let's go to Dow Jones Industrial Average. This is the monthly chart of Dow Jones Industrial. Monthly, guys, is a monthly, right? So what you can see is this is an extreme overbought scenario. Extreme, right? Extreme overbought scenario. Only a few times we've been into this level above 90 in this Dow Jones monthly chart is here in 1985 and here in 1995, 1996. We're going to make this as example here. You can see this was actually higher. 1985 was higher than 1995. So 1985, we're actually now higher than 1980. We're actually entering brand new all-time high record on the Dow Jones Industrial Average, this monthly chart, this oscillator, which is RSI, right? This is specially configured actually for my to accommodate my trading style, right? So this is where we're at. What it means is we saw this significant bullish buying pressure. We saw a move, we kind of consolidated a little bit, and we kind of had some fizzling action. That's exactly what happened in like 2015, 2016, some fizzling action, some uncertainty, right? And then we started moving again. So then instead of this thing coming all the way back down to the bottom of band, we stop short and then continue higher. In that process, we have cultivated what? Higher low. What does that mean? It means market got into a second gear. A lot of times when it gets to second gear, it goes faster. You see that first gear, second gear, third gear, fourth gear, it gets faster and faster and faster, right? That's what we call an uptrend. That's what uptrend is. We are in a primary term uptrend. When we're in an uptrend, you always give benefit of the doubt to the buyers. You understand that now, right? So then now we're in extreme overbought sentiment, looking at this monthly. What does that mean? That does not mean just because we're in an extreme overbought sentiment, that does not mean that this thing is ready to crash back down. It doesn't mean that. Last time we got into this here, looking at a long-term picture, look at from 1995 to 2000. That's roughly 15 years of bullish run. I mean, we had corrections in between, but crash didn't happen. The bear market didn't happen. Bear market, by definition, is you get into the bear market for a year or more. And then stock crashes more than about 50%. Right? I think they're all different terminology, but I think like if it's more than 40 to 50%, that's a crash. And bear market, anything like around 25 to 30, there's a steep correction. So we got in a bear market, and the most difficult thing about bear market is that you stay there for like a year and a half. For a year and a half. Really, if you look at this more of a big picture perspective, the market really went sideways for 20 years. From 2000 to about, 2016 years, 15 years really. 15 years. So if you bought it at the top, it took you 15 years to break even. That's not a good sign. But if you bought it here, let's say you bought it right here today, and after 15 years, you're profiting. You see what I'm saying? The difference with a dull market, a consolidating market. Again, we're talking primary term versus a bull market. A primary term, secular, major primary term, a bull market there we're in. Do you understand it now? Right? So you can see that you buy up here, it takes you 15 years to break even. Is that a bull market? No, that's a consolidation. That's a sideways market after 2 crashes, right? Let's say you buy it today and you held for 15 years, right? And then you bought it in 1985, you held for 15 years and you saw gain, this amount of gain. That's a huge gain, right? That's a bull market. That's a good return. But you buying in 2000, you unloaded in 2017, 16, and then you broke even, not a good return. Does that make sense? So let's talk about this. So these extreme overbought sentiment in this long-term chart, it forecasts that the market is very bullish in the long term. So I'm not taking that away. I'm not disputing. You know that I've been the biggest bull since 2016, mid-2016. I was the only one on YouTube they're calling that the market isn't going to crash and it's actually going to thrive. You can go check my videos in 2016. There's nobody else on YouTube that emphatically saying everybody else, all so-called experts and quote-unquote gurus, either they were scared to call anything or when they call something out, they're going to have something crazier than 2018, right? They're saying that we're going to see something even worse than 2018. We're going to come back down to, it's going to be this huge megaphone pattern. We're going to come back down lower than 2008 crash, right? That's what everybody was saying. So I'm not just saying this now. It's easier to say this now. So you get in the right perspective here. So now that this is exactly what I've anticipated. This is what was going to happen. That this strong bull market, this thriving in the market, and I explained that on my video why. Also fundamentally why. Go back and check my Dow's historical breakout. New secular bull market ahead. And I talked about how there could be a 15 to 20 year bull market coming. And that video was done in mid of 2016. Anyway, so we're here and we're getting to the level. Remember last time right there, you can see we had high and we had a higher high. that's kind of very similar here with these highs, and we're kind of cultivating higher high. You can see high and higher high. So pullback is coming. I'm not sure exactly when, but let's kind of zoom in here. So this is today, and this 1985. Let's zoom in and find out where we're at. Let's see. This is right here. This is now we're zooming in. We zoomed into right there. That, right? This monthly Dow Jones Industrial monthly chart, that circle. We're zooming in now here. Now we're on a Dow Jones on a daily chart. So since 2016, 2015, and 2016 move right here, since we saw these corrections here, since the bottom until yesterday, it had about 70% run. 70% run. 70%, right? So from here to here till today, that's a 70% run. Let's go and check what happened. And now let's go check and this right here, 1985, this circle. Let's zoom into this little blip here. As you can see right there, you see this? See a little blip, little up and down. Let's see what that looks like for the daily chart. Let's zoom in. And this is 1984, 1986, right? That's now we zooming in. And 1984, 1986, we had some consolidation, we had some decline, we had some uncertainty back in 1984. And since the low of this 1984 low until to this high right here, that's exactly 70% run. From here to there, 70% run, right? From here in 2015 and 2016, from here to today, 70% run. Isn't that ironic, right? They're very, very similar, right? This is where true beauty of technical analysis can illuminate, right? That's what you're studying. We're looking at these similar patterns and historical perspectives and sentiment. So here you can see we also saw 1984 to 1986, about 70% run. And it was definitely a smooth bullish run in October, November, December, January, February, right? Smooth bullish run. It's very, very similar to what we saw today right there. It's a very, very smooth bullish run, right? Smooth bullish run. And we all know, everybody knows, nothing goes straight up forever. We know that. Nobody knows when it's going to start to see volatility. And most recently flipped bulls wish that it never ends. And maybe hoping that maybe it will never end. Maybe we're entering new era of trading, right? No, there's no new era of trading. It all happened before, it's going to happen again, right? So I am anticipating about 5-10% corrections, maybe more, a little more, or maybe 12% on the Dow Jones Industrial Average. And I believe that we're going to see something like this throughout this year. Something like that. Doesn't mean it's going to have exactly that. Something similar to this, right? It could be something like this, and then this, or something like that. Or we could be like more of a well-controlled kind of a consolidation channel-like, falling channel-like of type of move, which would be perfect because they will be in like a massive bull flag, right? Or it could be just like scare tactic, where it does do something like this and create like this head and shoulder formation, just scare the hell out of everybody, right? Oh my God, the crash is coming, and then just gets right back up. That's actually a big possibility. Just scare the hell out of everybody and then get up. I don't know exactly how it's gonna play out. All I know is odds are catching up. Let's look at S&P 500 index here. Excuse me. We've been looking at Dow Jones Industrial. Let's look at S&P. This is S&P 500 index monthly chart. Same thing here. RSI hitting the record high at 90, above 90. and there, that's 1995, 1996. This is today. Let's zoom into today. So if we zoom into today, this is S&P 500 index daily chart. Today, zooming in from the lows of 2015 to today, that's about 57% run. 57%. Let's zoom into let's zoom into 1996, right? This little blip here, right there. You see that? It got up and we pulled back a little bit, right? It looks like a little blip, but we go to daily chart, you will see what that kind of looks like. Let's zoom in there, and this is zooming into 1994, 1996, and had a huge move here, right? Great move. 1994, 1995, 1996. So we had a sideways move, up move, sideways move, and this thing did continue afterward. This is what I'm saying. I am bullish. I am bullish, very bullish in the market in the long term. If you're a long-term investor, don't close out any of your positions. Hold through. And when we see these pullbacks, 5%, 4%, buy that dip. Add more to the shares. And then hold it. I believe there's another one whoop. That whoop of bullish move coming after some volatility for several months, 4 or 5 months or so, right? So we're in this optimism phase, and then there's gonna be one last euphoria phase that I think is gonna come. So we got that optimism phase, and then kind of a sideways, and then we got the optimism, and then sideways, and then we're gonna have the euphoria whoop of move. It's coming, but before we get there, you gotta shake some people out, man. And the market is not easy. It's not gonna just roll out red carpet and just welcome everybody to make money so easily. Though it was such a awesome market. It was a great market in 2017. It was one of my best year in my career. And I think a lot of people also did well if you're able to catch that move all the way. This is kind of what I'm talking about, going back to, position trading and position trading and long-term investing, is that if you're swing trading this, you're not able to fully ride this up. This is a reason why this is a time position trading is the best method to make money, profit in this kind of market. Because if you're swing trading, man, you go long, you close out, and then you wait, and then you go long, and you get stopped out, and you go long, you get stopped out, you get long, you get a little partial of it, you go long, you get stopped out, and then you just up and down. You're not really truly riding this. But what if you went long, boom, 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 right? And then you just ride it all the way up. It might not be all the way up, but what if, because you know that if you've been following my blog, I've been talking about how this is a buying opportunity right there in March. There's an article there. You can also check my market update videos. It all labeled with dates. And I've been buying this, fully holding all of my long-term calls, and then ride it, and then start closing them out at the top here as it starts to rip, right? And was able to get most of this. The calls that I bought here, guess where I close it out? Somewhere up here, right? So this is, and at the same time, what did I have? I have long-term shares that I bought these levels and bought it, and I'm still holding that. So this is a market where swing traders, day traders are not profiting as much as long-term investors and position traders. You see what I'm saying? So S&P 500 index. So this is, again, this going back where we're zooming in now. Here, we're zooming in at a 50% run. 50% run, and it's the volatility. So look at this, 1995 to 1996 move. Just great bullish move. And then we start to see this kind of pullback. 5% correction, 4.7, 10%. And this time it threw head and shoulder pattern. It did throw head and shoulder. Look at that, the perfect neckline there. Left shoulder, head, right shoulder. Actually, this thing didn't come down though. It actually just gonna stop short and then continued on higher. So this is what I'm saying. I am bullish in a bull market. I am bullish in the long term. goes up, consolidate, and then it's gonna go higher. That's what I forecast. So what's gonna happen is in this year, could be February, March through July, August, September, we're gonna see some volatility, and after the volatility, the market is gonna see another bullish move, something similar to that, right? So on those 5 to 4.7%, those will be a great level. Start accumulating positions so that once the market starts to run up again, you can able to ride it. Does that make sense? Does that make sense? All right, so that's my special report. I'm gonna go through just how I've been playing, because I practice what I preach. I don't just say things. And if you've been following me, you know that I've been writing post on Intel since when this thing was around 30s, right? 35 right there. This is when I'll start accumulating shares and calls on Intel. We talked about how Intel is in this kind of an 18-year consolidation, and my article post titled Intel Set to Soar, and my target was 80 and beyond. So that's kind of what I did. Again, I practice what I preach, and I show my work. Probably I'm the only trader on Twitter with the website that will show you my real entry and exits live. Like my journal post from the day that I get into it, from the day that I exit, it's all documented, right? But anyway, so this is when I start to accumulate right here, back around 35-ish, start buying calls and shares. This is the reason why I bought both calls and shares. Because once this thing starts to rip, I'm all out of my calls. But you can see this thing continues higher today. Earnings last night, Intel's up about 9-10% today. It continues to move higher. So now I'm holding full shares and my target is about 80, right? And I did add some shares here around, I think, 44, and then I added a little bit more around 47 at open today. So I have pretty heavy size that I added around 35-ish, and then added around 44, and then added a little bit more at 48. Shares. Calls are completely gone. I didn't add any calls. And Intel, same thing. Cisco is also dealing with, look at this, almost exactly same pattern. I mean, ask yourself, do you really want to buy Microsoft at the top here? Is it where you want to buy it? Or would you rather buy it maybe somewhere here or somewhere here? Here and ride it up, right? Do you want to buy Intel when at 80 when everybody's talking about it? I was buying Intel when nobody was talking about it. I was buying Cisco when nobody was talking about it, right? I was buying NUE when nobody was talking about it at 50-ish, right? Right there. The retest. Right? Do you want to buy it up here? That's what I'm saying. I don't understand when people want to buy Nvidia today. When people want to buy Facebook today. I don't understand when people want to buy Netflix today. I guess if they're low short-term trading, they just want to get a little scalp here and there. But you want to make some big money, don't buy Netflix up there. Don't buy, Nvidia or Amazon. Like amateur, like a newbie, like a taxi driver in New York City. Buy it when nobody's talking about it. Have faith in your analysis. You have to stand alone. Something I always tell my members, run your own race. You're not competing with anybody else. Run your own race. But one thing I also realize is if everybody starts talking about something, it's too late. If everybody's talking about Bitcoin, it's too late. I mean, if everybody's talking about Nvidia, it's too late. You gotta buy it when nobody's talking about it, right? That's exactly what I do in Intel. Again, like I said, I practice what I preach, and all my work is shown in my blog, right? So, do you wanna buy Intel when it gets up here 80, or do you wanna buy when it's quiet, when nobody's thinking about it, when nobody's looking? Cisco, same thing, I started buying right here, 31.20, right? I bought calls and shares. My calls are completely gone, but I'm holding I'm still holding some calls because I did buy 2019 and 2020 calls. So I'm still holding some calls, but I'm holding full shares. NUE, same thing. I'm still holding long-term calls and shares that I bought here. AA, same thing. Right there. This is where I bought it when this thing was when I was retesting that, right? Do you want to buy it here or do you want to buy it up here? You see what I'm saying, right? I'd rather buy it here and ride it up to 120. What else? CA has not yet broken out. CA has not. When do you think I started accumulating this? Right there, right here. This was when I started accumulating. That's the exact same setup as my Intel. Look at where I got in on Intel. Right here, right there. You see that my water, the background, that's my proprietary indicator. It kind of showing the momentum and the trend and potential level support as long as it stays. It's what I call water. If it's underwater, if it's swimming below the water, you're you know what I mean. You're suffocating, right? You're submerged. You want to get above the water. You want to surf it up like a surfer. You want to surf above the water. Once we surf above the water, and when we come retest, that's the good level to buy, right? Intel, Cisco, and then CA, guess where I bought it? Am I going to buy it up here when this thing is like, oh my gosh, everybody start talking about it at 70? No. Why do you think I start buying it? Right there. I started buying it around 30s, I think. Right there. I'm anticipating a breakout. This is also 18-year consolidation. What else? Hudson. This is a recently acquired position that I bought it around 562. This is a micro cap. But this is also dealing with what? This long, almost 20-year base. Do I want to buy it up here at 24 when everybody's talking about it? Or do I want to buy it at around 5 and then ride it up, right? What else? MGM, right? MGM I started buying in 2016, mid-2016 right here. When it cleared that right there, right here. Why? Why did I buy that? Well, because you can see MGM, we had a consolidation. After consolidation, thrive. I don't see this kind of move happening in MGM, but something similar, something more of an uptrend, but not this vertical though, not this parabolic move. And so I started accumulating here, pretty heavy position because this was my first, MGM and KBH was my first long-term investment stock I started accumulating. I wasn't sure how many setup there was going to be available, so I actually did pretty heavy on the MGM. It played out, but so that's right. Do you want to start going long up here, or do you want to go long maybe here and ride it up, right? What else? TPR. This is Coach. I started buying it. Actually started buying it right here, right? This is an invert head and shoulder, and then it got up, came down, right there. And this is a good adding point right there, and then now we're getting back up. Do you want to buy when Coach is up here, or do you want to buy when it's down there? And I'll tell you another one since we're at this retail sector. Ralph Lauren. Is anybody talking about Ralph Lauren right now? Is anybody? Oh my God! Is when you get a taxi? Is anybody saying, "Oh, did you hear about Ralph Lauren?" Right? Is your neighbor talking about Ralph Lauren? No. That's the one, right? I mean, you gotta know which one to buy. Obviously, you're not gonna just blindly buy anything. But if your neighbor's talking about Bitcoin, you don't wanna buy Bitcoin. If your neighbor is talking, if a clerk on Whole Foods talking about buying Amazon stock, right? That's not where you wanna buy, right? When your friend who doesn't know anything about stock market talking about Nvidia, you don't wanna buy Nvidia, right? I'll tell you exactly, and it's for those of you right there. How many people think that, oh yeah, man, I wish I should have, could have bought it in 2009, when market crashed, shoulda, coulda, woulda, well, I never did it. You know how people say that? It really irritates me when people always say that, oh, Facebook when this was a $15, oh, Twitter, that. People always say that. But I would say, yeah, but you didn't. It's with a straight face. I'd be like, but you didn't buy it. It doesn't mean anything. Doesn't mean you're smart. I don't say this. Doesn't mean you're smart just because you knew. Everybody knew, but you didn't have balls to buy it. I don't say it that much, but that's what I'm thinking. So you shouldn't even mention it. You know, people say it all the time, like, oh, I knew it, this was that. You know what? I bought Twitter at 20. I wrote an article about it. Back when Twitter becomes 100, I don't know, maybe next few 2-3 years, a lot of people are going to be saying, oh, you know, yeah, I remember when Twitter was 20. I remember when Twitter's, you know, $15. Yeah, I could have bought it, but I didn't. Well, you didn't, but I did. How many people are saying that? And that's kind of what I said. I remember when this setup was going out for my members, I said, well, how many times you thought that you could have bought it at $50 in 2009 raw floor and then could write it up? Again, this is a monthly chart, guys. That's from 37 to 200. 37 to 200 in just short few years. That's a monster return, right? And then when this thing was trading at like 80s or 70s, and look at this setup, bullish divergence, exactly alike. And this one actually made it better because we had a bullish divergence on MACD as well this time, not in 2009. So I said, hey, you get your chance. So who wants to be brave? Buy this dip at 70s and 80. Who wants to buy this? Who wants to be brave? Because you say you wanted to buy, and I'm just kind of talking. I'm not telling them they actually, they actually want to buy, but I'm just kind of making a story here. Well, you wanted to buy back in March 2009. You wish you could have. You wish you could have, should have, would have, but you didn't. But here you go. There's another chance at 75 right here today. This was back in 2017 June. Right there, and we got all these divergences right there. You want to take advantage of this, or are you scared? Sometimes you see these signals, you go for it. Now, doesn't mean that all my setup's gonna play out every single time. Sometimes you go for it, especially when we're in this bull market, and that's where we're at. A lot of people still not talk. A lot of people not gonna talk about raw for until this thing starts to really get up. So you want to buy when nobody was talking about it, but you got to know what to buy. You can't just buy a falling stock here and then, you know what I mean? Like, you got to know where to buy and what kind of technical signals that that you perceive to be a good setup, right? IBB is another one. Started buying. Where do you think I started buying it? Right there on this pullback, right there. Right. This was actually because. Where's my fib? Come on. Right there. That's a 50% retracement right there. So if we go like this, from this, because this is where that up move started, right? Come down exactly to where 50%. We're in consolidation and it pulled back, right? So that was, and it's starting to what? It's starting to hug the water, right? Surf the water back, right? Also, I also bought ERX when I went long with calls and XLE, and I've been talking about this in my past midweek update or video or market update videos in the past few months, where you can see there's a there's a Fibonacci right there, 50%, very similar setup right there, right? How many times do you people say, I could have, should have, would have bought it 5110 and then write it up what I didn't, right? So here you go. You got your chance right there. So I bought that. So when I bought XLE, I also bought calls and I also bought ERX shares. As the XLE thrive, I closed all of my XLE calls, but I'm still holding ERX bullish 3x shares. I'm holding shares on it, right? Just in case ERX continues to move higher. If it pulls back though on XLE, maybe a little bit, then I'll be buying that dip, right? Same thing with Tina. You gotta know that I'm all out of my call options on my IWM calls, which I've been journaling since like early 2017, like March, And then recently I closed out all of my calls, and it's all documented on a daily, day-to-day basis. When I enter, when I exit, when I added it, and this wasn't when I was like just ferociously adding to my calls, right? Well, not only I bought IWM, but I also adding some TINA at the time right there, so then I can still write it because IWM is currently continuing to move higher. So when the market is this bullish, what I tend to do is that I would, on the dips, I will buy calls and shares, right? So that if the market continues, because something that I always say is what? Benefit of the doubt continues to go to the buyers as long as the trend is up. And so even though I've been cautious, I've been closing out my call positions, I'm almost completely out of it on the equity side, I still have shares. And this is much better for my holding shares, because if this thing actually does see a pullback, in that time, there are a lot of shares who were able to make its move to the upside, so there's a lot of cushion. Like I said, 5 to 7% correction is probably coming on the S&P and the Dow, and it's gonna be rocky. It's not gonna be easy year, but with the proper risk management, then there's nothing to fear. And I'm actually excited about these dips, so then I can buy these dips, and there will be more, because a lot of these shares will be on sale, right? Before it can continue higher. But at the same time, know this, that I'm not like blindly like, oh my God, let's bet the farm. Like, oh my God, let's take out the second mortgage and just put everything in. No, like why? You gotta always manage risk. You all gotta have to always thinking in your head, the back of your head, that the worst case possible scenario. But when you're trading the market, when you're trading investing in the market, it's all about probability, because there's nothing is 100%, nothing is guaranteed in the market. But I don't know why so many people are so hard to believe this. I mean, think about your life. Is your life guaranteed? Can you guarantee me today that you won't get sick tonight, or you won't fall tonight, or maybe you won't get shot? There's a high probability that you won't get shot today. I pray that you'll be well, you'll be happy, you won't get shot, you live long life. But can you guarantee me that you will be 100% alive tonight? You have a high probability. That's what I'm saying. What I'm saying is this: I cannot guarantee 100% the market is gonna thrive this year, but I'm very well certain that after these kind of corrections, market are going to continue higher. But I'm also very well certain, I don't know exactly when, but we're going to see a corrections coming, 5 to 10%, maybe 12% on the Dow, and you're going to see this kind of fashion, a lot of up and down, it's going to make a lot of traders very irritated. Because a lot of these newbies, a lot of these amateurs who just started buying the dips at the top, just flipped the bullish just now, just a couple weeks ago, a month ago, they're expecting a move to continue like this, like a smooth move, because they missed out on it. They missed out on it. Because they missed out on it, they wanted to continue. They want to feel like what it's like to be a part of it. Isn't that interesting how the world is today? A lot of these poor people, they cannot afford a nice car, a nice TV, or a nice phone. Yet they all buy these expensive phones and expensive cars just so they can feel like what it's like to be rich or luxury. But you're broke. You see what I'm saying? Like, I read a lot of Robert Kiyosaki's book. I don't know if you know who Robert Kiyosaki is. His books are great. Rich Dad, Poor Dad. Robert Kiyosaki, I wouldn't trust any of his market calls because he's not a trader investor. He's a real estate investor. He did really well. His books are great, but his market calls are horrible. He called for a market crash in 2016. I think he's still calling for a crash. But as far as his books are concerned, educational material, apart from the market, as long as he doesn't talk about stock market, I respect him very much. And Robert Kiyosaki said the rich always buy the luxury later, but the poor always buy the luxury first. And that's exactly how the market is this is where the poor start to want to get in and feel like to be part of this move. Yet the rich was already, they took the risk and started going along here and actually felt what it's like to be rich, to make wealth in their account. The poor, they got scared all throughout. They never put a risk. They never put in any work. And they're just chasing this up just to feel. But they're always anxious, always nervous, because they're always chasing that next high. You see what I'm saying? It's so funny how people look at like Warren Buffett, all this, and different Ray Dalio, and this different people. They worked. They accumulated their wealth over time. It's not like that happened just overnight like that. It took me just hardcore work, 5 to 7 years, just you know what I mean, trying to figure out the market before I was able to understand what the market is really doing. But all these quote unquote poor people, poverty mentality people will not put in any work. And they just want to feel like what it likes to be rich. And this is a reason why all these bozos, all these fake gurus on Twitter and YouTube, you know, all these different people showing their Lamborghinis and, oh, look at my house, oh, look at this. Like, you know what I'm saying? Trying to feel what it's like to be rich when they don't have it. They don't have it. They don't have true wealth. That's how you know, guys. The people who truly have the wealth, they don't feel the need to show off their things. They're humble. They don't want to put anybody else down. You see what I'm saying? They're humble. They don't need people to look at them and say, oh, look at me. They don't need that, because deep down inside, they know. They know that they got it. They know that they're successful. They know that they will do well in the business world, in life, and in trading world. I'll give you one tip before I let you guys go. You want to know who really good traders are on Twitter and stock Twitch? You can tell by just the way they tweet, how many times they tweet, what they tweet about. If they're always trying to, you know, praising themselves or reinforcing how good they are, tweeting every second inspirational quotes and, oh, look at what vacation I'm in. Oh, look at what kind of liquor I'm drinking. Oh, look at what kind of car I'm buying. Oh, look at what kind of vacation I'm in. Oh, look at. They're the sad people. They are the sad people. Don't you understand? The really happy people don't need approval from the strangers, guys. And people, traders who really make money, they don't have time. I don't want to spend all day long tweeting things every second. I got life to live, life to enjoy, right? And business to run. I don't have time to put out inspirational quotes every second, right? Oh, look at my house. Oh, look at this. Oh, no, I don't live in this virtual world. I live in it. So there's my little insight, wisdom, and rant. So there you have it. Special report. Market is bullish in the primary term. I am bullish in the primary term, but I believe the correction is coming and it's going to get very hectic. And a lot of amateurs and noobs who's just chasing this, they will get wiped out. But I believe the market will be bullish for the next more years. But there will be corrections in between. And only correction right now that I see in foreseeable future is like 1984, 1996, this kind of type of action. But this is inevitably is a consolidation pattern, which is a bullish pattern, right? But it's gonna have these 5%, 4%, 10%, 10% corrections in between. So that's my forecast. That's my analysis, and just trying to put all my thoughts and trying to help you guys out with how to approach this market. And I hope you guys enjoyed this video. Have a wonderful weekend and good luck trading next week.